With that, let me take you to today's session on financial literacy by Buzz Women. Buzz Women is a movement from the heart that brings together more than 6 lakh women worldwide who are different in culture and background, but united by the wish to take control of their own lives, to get behind the wheel of progress, connected through their inner strength and solidarity. Buzz Women offers education, inspiration, and support. Buzz Women's School on Wheels bring knowledge, skills, and tools to their doorstep. This creates the enabling environment where the transformation process starts. Buzz Women approaches the progress holistically. The financial literacy program focuses on 5 crucial elements that drive progress: cash, confidence, climate, care, and community. This session isn't just about theory. It's about giving actionable knowledge to create a more abundant and sustainable financial future. I have pleasure in introducing you to Uthara Narayanan, co-founder and chief changemaker of Buzz Women, and Dipika Nagpal, chief strategist and partner at Buzz Women. To say a few words about Uthara, Uthara is the co-founder and chief changemaker of Buzz Women and a leader on a mission to empower women across the globe. Uthara's journey started with the dream to support women through financial literacy and has since blossomed into a global initiative that's changing lives. From rural India to global initiatives, her mission is to help women embrace their worth, break free from patriarchal constraints, and craft a life they love. Uthara Narayanan's deep commitment to uplifting women is nothing short of remarkable. Her mission, helping women discover their inner strength and leadership potential, is transforming communities worldwide. If you're passionate about gender equality, empowerment, and creating meaningful social change, this is an episode you don't want to miss. To introduce the other speaker, Dipika Nagpal, who's the chief strategist and partner at Buzz Women. She spent over 13 years in corporate finance. The most important skill she developed is the art of managing people. Treating people with integrity and respect goes a long way in fostering collaboration and bringing out the best in them. The competitive spirit in Goldman Sachs and JP Morgan, where she served earlier, have transformed her into an individual who can lead and come up with creative solutions to solve complex problems and make it second nature to pay attention to detail and become a keen observer. That's exactly what she does at Buzz Women and enriches people and programs in her own way. With that, let me open the floor for Uthara and Dipika and welcome both of you to the RISE PECOWorld Summit 2025. Over to you, Uthara.
Thank you, Akhila. Thank you so much for that introduction. I was just telling the offline audience sitting here that they have not heard your introduction because they only see the screen and not you. So I am going to take a minute to introduce. Welcome, everyone, on a Saturday morning. Thank you so much for being here. We're going to do a session on financial literacy. My name is Uthara Narayanan. This is my partner, Dipika. I have around a decade and a half experience in the social sector. I work with rural women. The story is that I come from a family of strong women who did not have opportunities. So my grandmothers and my mother are very intelligent, very wise, have a lot of wisdom to give to the world, but they didn't have the opportunities to utilize it. I'm very privileged that I've been able to do that. And that's how Buzz Women was born, because I said women who don't get opportunities like my grandmothers and my mother should get that. Initially, when I started, I'm a cost accountant. So when I started, the whole idea was around money. So if women can understand money, then all problems are solved. I was very wrong. Money is just one part of your life, but it's a very vital part of your life. If you begin with understanding money, but then find the confidence, collectivize with others, understand the climate, understand your healthcare needs. So all these 5 aspects that you see, it's called the 5C model. What Buzz does is enabling women with the knowledge, skills, and tools in these 5 C's for them to craft their lives, to take charge of their problems and their solutions. Today, we're going to focus on one of the C's, which is cash. For women and also men, thank you, men in the room as well, for joining us. For people to find the financial freedom, and you can define it for yourself. It is not predefined because one person's definition of freedom could be very different from the other. So that's what we're going to do today. It's actually a 3-4 hour workshop, but we have crunched it for this particular RISE event to make it into a 1 hour where you'll have some gamified modules where you can work on your own understanding of it. We will have some knowledge elements as well. I'll give the stage to Dipika to introduce quickly, and then we will move.
I was in the investment banking industry for about 14 years before I made the switch to the social sector. The reason is quite simple. I, much like Uthara, also was really privileged to have opportunities to have financial independence. And the knowledge that I garnered through my journey is something that I really want to share with the people around. Because I think there is a need for it. And I think a lot of women and men will benefit from this knowledge. So yeah, let's kickstart our session. So is anyone expecting anything particular from this session? Like, are there any ideas of what you want out of this session, what you want to learn, what you want to take back? Who's heard about KYC in your jobs everywhere? What does it mean? What does it mean? Full form. Know your customer. Okay. What about KYW? Have you guys heard about what KYW means? Know your worth. And what does worth essentially mean? Your net worth. Why is it important to know your worth? Because that's how you're going to be able to know what you own versus what you owe. And that's where your journey starts. That's basically the foundation. You obviously, to get somewhere, you first need to know what is the gap to bridge and where am I starting? Like, what is the foundation that I begin with? So these are your steps to attain the financial freedom. The first step is know your worth. The second is we're going to do a fun activity, which is finance in action. And then we're going to talk about the abundance mindset. Yeah. Let's get into know your worth. Okay. So like I mentioned, it's a key task to ascertain the gap between our reality and our dream. What we own versus what we owe. What are assets? Assets are obviously, everyone knows assets are things that we own. Right, which is like your home, your PPF, your jewelry, your fixed deposits. What is a key thing that you need to remember when you make a list of your assets? The most important thing that you need to remember is how many of your assets can be monetized, right? What does it mean to be able to monetize my assets? Which means which assets do I own that can earn money for me? Apart from me having an active job or having an active way of making money, what is a passive way of making money? So whether you have your fixed deposits, your mutual funds, your debt instruments, these are all passive incomes that help you earn money, right? So the reason that you do this activity is you need to also get a sense of split of what are your tangible assets versus your intangible assets, which means which assets do I own that can be put to work, that can make money for me, versus which assets are for my safety. Like you own a house, you may not be able to earn anything out of it until you put it on rent, but that's something that's like your safety or a security blanket, correct? So those are your assets. Now let's talk about your liabilities. Obviously, things that you owe to people, right? Whether you've taken a car loan, your home loan, you have credit card bills outstanding. That is the money basically you owe to people. So those constitute your liability. Once you take in your assets, take in account of all your assets, reduce down all your liabilities, that's why you'll come up with your number, which is your net worth, right? And that's the foundation of how you start then planning ahead to reach your financial freedom. One quick question. Who here thinks car is a great asset to own? No, nobody? Why not? Correct. It's a depreciating asset, meaning that you're never going to, the amount you spent on earning or buying a car is never going to come back. You'll always take a hit on when you go to sell it, right? So it's a depreciating asset, which increases in price. But yeah, generally, anything that you own, which you use for your personal self, like a car, or iPhone, or whatever, which does not appreciate over time, is going to be listed as a depreciating asset. Why is that important to know? The reason that's important to know is a lot of us think of these things as something that are valuable, like I own a car, but you need to look at it from a perspective of it's just for personal use. So before you make an investment, always have that in your mind that I'm using this, but this is going to be depreciating over time. My money value is only going to come down, right? So that's why it's important to know which are your depreciating assets versus your appreciating assets, and also how many of your assets can be monetized versus cannot be monetized, right? Once you know how much you own, post that you go into your goals, right? Like these are my goals in say 5 years, 10 years. Based off that, your assets need to sort of support your financial goals. So the assets that you have should be able to drive that growth, right? That you want, or what do I need 5 years from now, which will help me achieve a certain goal, whether it's to take a family vacation, to buy a home, to sponsor my children's education. How are my assets going to help me in those goals, right? This is why you come up with your know your worth financial statement, right? Now let's do a fun activity. Okay? So no, yeah. Okay. Yeah. Okay. Does everyone have your card?
Just to answer, there was a question from the offline audience here saying that how do I decide how much money do I need when I retire? There are enough calculators online, so we don't need to repeat that work. There is maths to be done behind it, but it's basically present value of money based on what you're spending now. If you can just go online, if you just type in saying my retirement goal and say, right now I'm spending, let's say, 1 lakh per month as a family. And how much do you expect to spend once you retire? Just put down that number, an approximate number. It'll tell you if you put in your current age where versus where you want to retire, it will tell you a number. For example, let's just assume that you need 10 crores when you retire. You're in your 30s, and when you get 60, you need 10 crores. If after that 30 more years, you want to sustain this lifestyle. That number being 10, 15, 11, or 5 doesn't matter. What matters is how you're going to get there. What are the actions to be taken for that? What investment should be done based on your age? So the scenarios that we have just distributed in the cards will actually help you think in that direction. That how do we reach there? Of course, it's important that, 5 versus 10 crores, there is certain investments that will get you faster to one than the other. But I think currently, if you are just starting your journey, what is more important is to begin it by knowing your net worth, which was the step one. And now to say, where am I going to invest the savings that I'm going to make every month? Where am I going to invest so that it will grow? Yeah.
Okay. Who wants to learn?
So people who are already retired, one, are they pensioners? That's question one. That do they already have pension coming month on month? The second is, do they have from their PF gratuity, whatever they worked before, from that? The third is assets. There's also something called reverse mortgage now. If they don't have anything else, are they able to reverse the house that mortgage their house that they're living in so that they can get a monthly income? So there is a lot of personal sort of advisory that will be involved depending on the scenario. But right now we are focusing on people who are not retired but earning.
No, but it also depends on goal, right? Yeah. Yeah.
Okay, so for even then, I'm also trying to learn more.
So what depends on what's your financial goal. So a person here has asked about if they are retired, how should they look at it? Depends on your financial goal. If you have a financial goal in mind, to say this is what I want monthly, this is what I want to earn, based on that, you can take your decision. So I think goal setting is very important. Like I said, this is a crunched version of the workshop. Usually our 3-hour, 4-hour workshop, we will make you do the goal setting as well. But that's also once you know your net worth, your current situation, also to know where you want to go. Based on that, you can take it.
And let's just extrapolate that example, right? How important the goals are. Let's take Anku's example here. And if his financial goal is to just sustain himself, what would be the investments based off that? If the goal is I want to create more wealth to leave for my daughters, I am sorted and I want my daughters to have more wealth. So my goal is that. In that aspect, age could just be one factor, but you also need to be able to understand what is the risk-taking ability of the person. Meaning, if I need it for sustenance, obviously I'm not going to invest my money in assets that are risky, right? Because my sustenance is dependent on the returns I'm getting. If it is wealth creation and I'm sorted financially and I want to just make it interesting and I have this interest to want to create more wealth, for the purpose of just learning how to do that, I'll probably choose more exciting, risky things. I might want to invest in a startup that I don't know I could end up losing all my money, but I'm fine with taking that risk. So generally, people always attribute your goals to your age, but another important thing is also what you're trying to get out of it. So it could be generally people assume when you're younger, your risk-taking ability is higher. May not always be true. Reason being, if you're 30, have a responsibility of your ailing parents, your children, your spouse, you may not want to take a lot of risk. Versus somebody who's in their 50s and has sorted everything out in this case, where everyone's settled, they do not have any responsibilities, they might actually have a more appetite for risk, which means riskier investments are for them. So that's one myth that we're trying to bust as well. It's not just about the age, it's about what you want to get out of your money, right? So let's go through who has scenario 1. Scenario 1. Okay. Let's call out the scenario, right? This person is 24 years of age. The priority one is they've just probably started working and they want to create an emergency fund. And the next thing is they want to be married maybe 4-5 years down the line and they want to begin saving for that, right? So what are your investment options available? So what is the primary criteria of wanting to create an emergency fund? What is the first thing that an emergency fund needs to do for a person? I mean, not kind of, but like, what are you seeking when you want to create an emergency fund? Safety.
Yeah.
Yeah. Correct.
Emergency fund. Okay. The word itself, think of it that way.
Yeah.
No, I think it's for the audience.
Yeah, but what kind of investments would you do?
Health insurance.
Correct. Why? Exactly. Correct. Correct. So that's how you attach the investment that you would choose based off the goal that you have. If you want to create an emergency fund, you know that fund has to be liquid, meaning anytime I have an emergency, I should be able to pull into that. And second is it needs to be safe, meaning that anytime I want the money, I should not lose out on interest or anything of that money, right? I should be able to get all of it. So your investment options would definitely be mutual funds and fixed deposits. Why did I say mutual funds? They are ultra short mutual funds that can be redeemed at any point you want and generally are considered low on risk. So those are the options. Second is priority 2, begin saving for your marriage. So what are the options that you would use for that? Great. That's a great option. Yes, because marriages generally require gold. So you would try and make investments in gold. What else would you do? Again, mutual funds, right? Because they do have some sort of safety, little risky, but are a little bit less riskier than your equity stocks or your digital currency, right? So that's your first scenario. Let's quickly go through the second scenario. The person is 32 years of age, wants to begin saving for their children's education and wants to buy a house in 5 years. So what are the investment options that are suited for them? Yes, correct. 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 What about planning to buy it? What would you invest? And what? How about bonds? What do you guys think about bonds? Bonds always have a fixed tenure, and your return is generally, if it's a secured bond, your return is guaranteed, and it gives you a way to plan your next 3 to 5 years, right? So if you're not in a hurry where you need the money immediately, marriage is something that you do get a year or so to plan and to figure. So you invest in bonds because bonds come with a fixed predetermined tenure, correct? Okay, option 3. Yeah. Correct. So that's going to be something like a fixed deposit, right? And what about your child plans to study in 5 years? So again, you know the tenure when you would need the money, which is why again your bonds would make a a good option, right? Correct. Yes, stocks could also be a good idea. Okay, so that's scenario 3. Let's go through who has scenario 4. Yeah, so your early retirement. Yes, you're right.
Dipika, speak here, please.
It's somebody who is in a place where they're financially secure. This is why they want to probably take more risk and look at newer ways of investing, right? So digital currency is something that is right, because they don't mind taking the risk if they're getting a good return. They want to create more wealth. So it needs to be a calculated risk, and they will try and probably invest in startups, other businesses. They would use digital currency as a way to invest, right? Because the returns are higher. It's a little bit more riskier, but a calculated. Early retirement, the goal is very clear. Yes, NPS, PPS, those are retirement instruments. Not everything. So yeah, you're right. Partly when you say plan an early retirement, the person probably has already started investing in NPS, wants to continue doing that. So NPS also has an option where you can increase, right, to sort of make the amount bigger in the next 5 years. You can focus more on your retirement plan, which means all these instruments that are there, you double your investment, put in more of your money so that your corpus becomes bigger.
So here's the deal, right? All of it, you will invest in everything. The quantum is what differs. Depending on your goal, you will change the quantum. So the scenarios that are there, I'm sure all of us have all of it. Each of us has it. The years might differ. So let's say you have 7 different financial goals right now. For each of it, you will also break it down. Not that you put entirely there. Just for retirement, not to say for retirement, put everything only in NPS. Put everything only in P. You can also vary it a bit, depending on your risk appetite. Saying it's fine. Even for retirement, I can just put, let's say 20% of that money that I have as a goal, which I'm going to invest into stocks, or 10% of it into digital currency, or 5% into something else. So you can vary it depending on your risk appetite, depending on your age, depending on how comfortable you are in your current situation. See, if you feel, I know in a year's time, things might change in my job, I better have more liquid things, then actually real estate might not be a great idea to invest. Because you cannot sell real estate so quickly. It's just by luck, sometimes they sell quickly. But otherwise, you'll have to wait. If you want to get a good price in real estate, you might have to wait. But the same thing, there is something called REITs now, which is an online investment in real estate. That could be probably an idea where it could also increase. So all of this requires a lot of thinking. What we're doing this workshop for is to trigger that in the first place. A lot of people are not doing it right now. The thinking is like, just put it in fixed deposit and forget about it, and we'll think about it later. Just to let you know, fixed deposit actually with the inflation is actually giving you lesser return right now. So, but because it is secure and because it's easy to make it liquid, that is why some part of it being there actually makes sense. Right. Yeah, so the first step is that what is their financial goal? To understand their net worth. Second step, right? To say right now, this is how much I have. And if they have an idea of month on month, how much they will be able to save, given their expenses. And once that is known, then to say part of it, put percentages. I'll set aside 10% for gold. So a lot of people do this, right? There's shops allow you to go and give them a savings in the gold shop, if that is a goal they have. The second is put it in an RD, so that at least you know that in 6 months Diwali is coming and I know I'll need the money, so let me do it. Just save one side so that I can take it out later. Split it under multiple things. There are annuity schemes that are there now, connected to insurance also. So you will pay a certain amount, and after 15 years, so let's say monthly you pay 1,000 rupees, and after 10 years, they will pay you back 5,000 per month or something like that. So there are various schemes available. LIC has it. All these insurance companies have it. So to split that, and I always say, don't put all the eggs in one basket. Sort of diversify. Also, given the capitalist scenario, you never know what's going to go bust when. Just split it across various things, smaller numbers. See, you can even start investing with 100 rupees. People don't realize that. Everybody thinks, let me get a big corpus of 5 lakhs and then I will start. You don't need to wait for that. You can start with 100 rupees. The mindset is what is the key.
Even now, like for those who don't know, the government reduced it down. It used to be a bigger amount earlier, but now you can start it even with 500 rupees, right? So yeah, like Uthara said, it depends on your goal. It depends on what you're wanting to do with your money. That will finally decide how you want to.
Dipika, you're feeble, very feeble.
Is this better?
Yes.
Sorry.
You're very right. You're very right. You're very right that, like in everyday life, you come out and say, I'm going to take a taxi today, and suddenly you don't find a taxi, you find an alternative. So that preparation has to be done. And that again goes back to the mindset. to say, I will fix a goal and I'm working towards that. When things change, which is where the emergency fund comes. Make sure that you're also, while you're working towards your goal, that every month there is a money set aside for that emergency fund as well. That you're not waiting for, that's another problem we have, right? When we set goals, sometimes we say, I'll focus on first goal first, and then I will go to second. Once the second is done, I'll go to third. In finance, it doesn't work that way. You have to work in parallel on all the goals, including the emergency fund. And especially people who are just starting to work or people who don't have an emergency fund, we recommend that you begin with emergency fund before you go to any other goal. Until you have money set aside for 3 months at least of your living expenses, no use investing in places where you're thinking of long-term wealth creation. Once you do the 3 months, please continue to save for 1 year. But in parallel, you can also start looking at other goals. And in this, which today we are not working on, it's also critical to look at your expenses, income and expense sheet. Where are you spending your money on? A lot of people, when you ask them saying, how much money as a family do you spend every month? Whenever we ask this question, 95% of people don't know it. They have a ballpark amount, but if we ask specific, how much is for living, in the city, rent expenses, maintenance is how much. They know the amount is going out, but written down, they don't have that idea. People get surprised. The eating out expenses, especially when you are younger, going out with friends, or when children come to an age and they want to go out a lot more, is very high in this. And once we start writing down, we will recognize as a family, and we recommend that you do this exercise as a family. It's a fun activity to sit down and say, hey, where all are we spending this money? Where is it that we can save towards another goal? So as a family, let's say we want to go on a vacation and this is the destination. Probably it will take us 50,000 rupees to go there. Can we save as a family over the next 10 months together? Having these conversations is very critical. Yeah, yes. So let me just ask this question. The moment I say money, what's the first word that comes to your mind? Oh.
I think
Akhila, there is a window that has come up.
What is the window?
It says, it's visible on this screen and it says host, participants, etc. And we're not able to close that. Are you able to close it from your end?
Wait, let me just check which is this.
Yeah. Look at all the windows that are open. Maybe we can ask this.
Is this closed now?
no, it's not.
Which is the window?
I guess it's from your side, Zoom. When you open your Zoom, you will see a participant list.
Give us a second.
Hanji.
Open the entire deal. And then, yeah. Yeah?
Yeah.
Is it good?
Yes,
Good.
thank you.
I can only see money and the other slide.
Yes, money. That's all. The slide is money.
Yeah.
What word comes to your mind? Just confidence. Somebody else. Come on. You shouldn't think. First word that comes to your mind. Independence. Freedom. What else? Panic. Valid. Nothing to laugh about. Yes. Anybody else? Complicated. Okay. What else? Vacation. Super. So you can see everybody's mindset is different. When it comes to money, this is how it is. And that has a bearing on how you deal with money. So if you think it's complicated, every time you want to work on it or do something about it, it will come from that place. When you think vacation, it will come from that place. So there are positive, negative connotations to the words. And we come with a lot of baggage on money, on how you have heard money spoken about when you were growing up. It could be either just an incident or it could be just a general conversation at home. That has a lot of bearing on how we deal with money, how we save, how we invest. Does it create panic, like she said? Or does it create a feeling of freedom saying, I have it all sorted? Are we feeling secure about it? And that's what needs to be worked on. Till now, what you have done is the knowledge piece. You know about PPF, you know about NPS, you know what it is, you know the goals, you've set everything. But until this mindset shift happens, the real freedom cannot be achieved. And there is a lot of scarcity mindset that we have grown with. It could be cultural as well. It could be depending on the region you come from, the community you come from. Money is spoken very differently in every different household. It's not spoken at all. Yeah, that is also true. In a lot of places, it's not spoken at all. True. Especially with women and girls, it's not spoken. Yeah. Yes. Yes, you're right. Correct. It's an irritating question saying, why do you need to know all this, right? It's fun. It's fun to know. Rather than thinking it's complicated, try telling yourself this, that it's going to be fun for me to learn this. It's a new thing I'm learning. Think of other fun things that you do and try to see how you make this fun. Panic is real. Feeling insecure is real. But feeling free, what is it that I need to do? What will make you feel differently? If you can just list that down. And one of the things in that, like I said, going from the mindset of scarcity to abundance is a very critical step. And I'm sure all of you have seen enough on YouTube, on videos, on how do you shift that mindset and manifest things for you, for it to happen. If you say, and this is told, we say this in rural areas, by the way, any rural area you go, you gather women, they'll say, we're all poor. We are poor, we don't have anything. I don't have enough money. Check out the groups you're in even now. So one is your parents, your community, that conversation. Think of the conversation when 10 of you get together in your friends group. How is money spoken about? Is it coming from a place of, oh my God, didn't get the increment and I can't survive on this and the kharch itna zyada hai, there's so much expenses, not able. There's a negative loop that is getting created. How to shift that into a more gratitude-driven group? Can we start? It is a state of mind, how you're thinking. First, you need to believe that you can change your state of mind. If that belief is not there, then we can't move forward. So Buzz comes from the state to say that we can all change our mindset if we put our mind. And to develop the thinking on more positively about money. Money is good. It gives us vacation. It gives us freedom. It gives us security. It's a good thing to talk about. And I'm going to talk about it positively. It's scary. I agree. True. That is true. You have to. Actually, not after every 10 years changing the goal, you have to relook at your goal every year, by the way. It is like every other part of your life, being deliberate about it. You have to sit down, and I recommended if it's a family to sit down together once a year, like how the budget is presented by the Ministry of Finance. Yes, that all of us, as we speak, is happening. So all of us need to sit down and say in our family, what's our goal? Where are we at? What are the changes we need to make? You might have to make different. See, also please remember there are other life happens around us. There is death, there is illness, there is emergencies that come up, or ambitions that crop up suddenly. Suddenly somebody decides saying, I'm done studying, I'm going to start my own business. That requires some amount of money and investment. You're very right, ma'am, that there are the monetary system around us, the macroeconomics is also playing a role on, right? So we have to be vigilant. But can we all believe first that there is enough money for everyone? You need to imbibe that first. And it comes from a very positive mindset. And you need to also believe that I deserve to have it. It's not complicated. I'm going to figure this out for myself. I'm not going to panic about it. After that, and of course, the main thing, please also don't compare with others. Everybody does it. Please don't be on Instagram looking at how others are spending money. They are only showing one part of their lives. We don't know what is happening behind it. And don't let the fear sort of control your momentum. I acknowledge that there is fear. I acknowledge that there will be points when you feel, I have no clue what I'm going to do. Now, because of internet, there is enough to read online, there is enough to watch online, talk to your friends, find a good financial advisor. There is enough help available. And this whole gratitude, and I can't specify enough, helps in all aspects. Now, I started doing this. I started going to 80-year-olds and asking them, saying that, tell us one life lesson. A lot of their life lessons are here, by the way, on the list. They say, I realize after a while, no use comparing with anybody else. No use listening to others about how they think about their life. I realize that fear has nothing, being in the place of fear is not really helping me at all. And the biggest I've heard from every single person, older person, when I ask them is gratitude. That if you can be thankful for where you are, imagine we are able to be here on a Saturday morning and talk about money. 90% of this country, maybe 95% of this country has to think about their next meal. We don't have to. Isn't that a huge relief? To say, hey, I don't have to think about my lunch or dinner today or even tomorrow. I know where it's coming from. Can we open up our minds to possibility? There are so many possibilities out there. Yes, it is scary, but at the same time, there is also help available. If you think help is available, it will come find you. What you focus on will grow. If you focus on abundance, it will grow. If you focus on scarcity, that will also grow. I know a lot of very rich people who complain about groceries and how they don't have enough money. And I find that in the next 15 years, they have reduced their net worth. It happens because you will take decisions based on your mindset. This doesn't mean that you be careless and say, "Arey, I'll get the money wherever, let me just spend it right now." That's not what being recommended at all. Have a positive mindset, but plan your actions. So that's what our session was about. You all deserve a very abundant life, and we wish you an abundant life. Open to more questions, comments, please. Even online, if we are allowing questions, Akhila.
Yes, we are. No questions so far.
Here? Yes, please. Phone. Can you? How much important should we? I understand. See, how much important? We are a monetized economy. Let's just accept that. There is no barter right now. So money is a very, very critical element. It is connected to everything. Think of it this way. If you want good health, you need money. So because are they comparing? Yes, definitely. It is connected to. That's why. I completely agree. I completely agree on what you're saying is the word you use, right? Greed. That's not a positive word. What we just showed in the list was the positive mindset on money. You need to check yourself to say that, the words I use for money, are they positive? Greed is not a positive word. All aspects, like you said, of your life and all your goals of life has to get connected. It's all interlinked to each other, whether it's your career goals, your future goals. It is connected somewhere. How much importance to give? The question is finally this: are you happy? Do you feel you're sleeping well? Do you feel you're contributing to the world? If you have those reflections for yourself, we can't set a limit because everybody's limit will be different. Probably, somebody who just mentioned their limit is 5,000 a month is enough for me. I don't want anything more. Somebody might say, no, it's 5 crores a month. We can't judge it also. I also feel sometimes that we need everybody. We need all types of people around us to have different goals. As long as individually they are feeling that they are holistically thriving. The aim should be that, even with money. Yes.
Yes. I think also you need to be able to differentiate between your needs and wants. There are a lot of people who attach their self-worth to how much money they have. Do you really want to live your life like that? That means you're in a never-ending cycle where nothing is going to be enough because you attached your self-worth to how much you're making or how much you own. And that will lead to a lot of, like you said, negative connotations about money, where you're constantly comparing yourself to someone. How much ever you have for your needs is not going to be enough. So it's very important in your mind to sit with yourself and figure out what is your relationship with money. What do I attribute? Do I need it do I have a very simple relationship with money where it helps me serve my needs and probably do good in the world? Or is it attributing to I've attached my self-worth to it and then I'm comparing myself to everyone, and every time I feel like I fall short, I feel the need to spend money because I need to show people I have it. So where is that relationship coming from? And like she mentioned, holistically, are you thriving? So money is one aspect, which is an important aspect, but you also need to look at what your relationship with the other aspects of your life, with your family, with your friends, how you're contributing to the world. Do you feel like you're doing enough? Maybe because a certain lack in certain spaces in your life might end up causing you to be dependent on money. So there is a lack on certain aspect. Instead of working on that, you try to overcompensate by earning more money, right? So it's very important to sort of sit down with yourself and understand what your mindset is, because that will drive your decisions about money. There's a lot of knowledge available. There's a lot of help available in terms of planning your finances, your investments, and all of that. But this work of what your core foundation with money is, what you think about yourself and how much you make, that's something everyone needs to sit with themselves and do, right? And as women, I think I speak for a lot of women, the culture that we live in, the country that we live in, there isn't much importance given in those aspects in your early childhood days. And I think women figure it out only after they start earning, right? And that's when they start thinking about, okay, what is my relationship with money? Even then, better late than never. Somewhere we all need to start and support each other's journey to uncover those conditions that we've grown up with, based on our circumstances, based on our family values, based on what we decided to do with our lives. Yeah.
True. So we are putting on your pocket is not full. Without this pocket, if I think something not things not the other person's not able to do it. So we have a lot of things having to you get stabilized. No, first you get stabilized, everything for the community. So when I say this, I feel very fine. You can do both. No, I understand both. But yes, we do understand that sometimes we are not, as you mentioned now, we are not setting up roles properly. We are not smoothing it in a proper form. So then we don't get into agencies so that we funds and responsibilities. We have done that. We have done this recently last week, but we are still black.
Dipika?
So with that, when we are talking all these things, we got our financial.
Dipika or Uthara?
Because my time, so there is a way you have to.
So really nice. See, I tell you, when you start thinking, things come to you. So great that you came here. So today's session was more personal finance. Happy to talk to you. I've built an organization the last 13 years. So happy to talk to you and do well. Definitely. Happy.
Okay, so we are women of wisdom. We work for community, we work on solid waste management. We started with civil issues to understand the issues of the civil industry, and then we left with what we do. We conduct master hygiene, manage composting. We want to do our things and all those things. And let's see how the data because we follow right now. We don't want to. We say like there's a feeling in Canada. So today is that today, it's not future. So if we don't do these things right now, we feel like later we are already in trouble. So we want community thinking on sustainability depending on community, your practice at home, you can do your health, anything sustainability is what we want.
Lovely to meet you. Lovely to meet you. Thank you. Yes, yes. Mike.
Dipika, can we take off the PPT and spotlight you?
Sorry. I didn't hear that.
Can we take off the PPT and spotlight on the two of you?
Sure. What? Take off the PPT. Sorry.
How much more time?
Just 5 more minutes. We'll just take the question. Yeah, you were saying.
Done. Thanks, I saw.
Perfect. Sure. I can tell that. That's a brilliant question. That's a brilliant question. Start small. So coming to the technical part of it, one is I would recommend have a demat account. So if you have a savings bank account, the same bank ideally is where you should have your demat account. So it's easier to transfer them. Or you can look at, there are enough apps right now which are recommended through which you can invest. Doesn't mean the app has the money, by the way. The money is going to be with you. NSDL will send you a monthly statement of where you're going to invest. Okay. So once you get your Demat account, I would say for equity, let's say you need every month you want to save 100 rupees. I'm taking 100 as an example. So let's say out of 100, let's say 10 rupees you're going to put into equity stocks. Go read online, pick good companies, big stocks. And I'm not going to recommend anything because we are in this space, but you can pick yourself. You know the big companies, you know what sectors are doing well. Pick those, and if it's 10 rupees that you're investing out of 100, I recommend initially just pick 5 of them. 5 stocks, just put 2 rupees each. And you know what to do. Another 10 rupees, pick mutual funds. There are a lot of mutual fund managers, a lot of banks are also doing mutual funds. So the bank where you have your bank account, you can do the mutual funds. Again, let's say split it among 3 of them. So you've already done stocks and you have done this. Then get an NPS account. I hope you can negotiate with if it's an employer, negotiate with them so that when they do the investment, cut from your salary and do the investment, there are some tax benefits also. Of course, now with the new budget, I don't know what all changes are going to happen, but right now it is there. Ask them if they can invest in NPS. If not, you can open a account. A lot of banks also connect to NPS. Through that, let's say out of the 100, put another 10 in NPS. So there are 3 already you have done. Let's say if you are interested in gold, if that something interests you, if it's jewelry, look for a big, there are a lot of shops which also give you gold schemes. Can you invest 5 rupees out of that 100? So that every month you invest 5 and at the end of the year, you can buy something. Split it. I'm a big believer because you don't know what is going to give you how much returns. And in 6 months' time, do a revision. Go back and see how are they doing. My stocks, how much returns did they give? Mutual funds, how much returns did they give? Fixed deposit, how much returns did they give? And based on that, you can say, okay, maybe I have a little more risk appetite now. I'm feeling less complicated. Let me invest a little more into a stock. So you'll also start reading about it. See, there is no substitute to this. You will have to read up because how much ever I tell you, you can't just trust my word in investing. I would say get your knowledge for yourself. Yeah. Sure. You're right. You're right. Sure. Great. Thank you so much. Yes. Last question. Yes. Yeah. Yes. Going up. Yeah. Insurance is important. So there's only health and medical. Other than your assets, when you insure your house, your car, your other assets. Other than that, there is only health and life. Term. That's what life term insurance. That's what she said. Yeah. Thank you so much for being such a lovely, engaged audience. If you have anything else, we are around. We can still talk. Would love to catch up individually as well. So thank you very much. Take care.